Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And the second step of my process is execution. And now look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups, I will be talking about an underlying asset, but setups can be taken with futures, stocks, or options. And on-topic questions and comments are welcome. I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. So please feel free to post. And hello, Karma FX. Glad you're here. Welcome. My agenda for today: first of all, I want to go over news, economic data, events for today, and then I'll go through my positional analysis. I want to review some setups from this morning, and then we'll take a look at the live market. So when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. All right, let's get started with, first of all, economic data. There were a couple of data reports this morning. First of all, PCE came out at 8:30 a.m. Eastern Time. And let's just go take a look at the live market. So we'll go to the ES futures. So the PCE data came out at 8:30 a.m. Eastern Time. And there really did not seem to be much of a reaction to that data. It came in line with expectations. And the next economic report was the consumer sentiment, Michigan consumer sentiment at 10 a.m. and it looks like that came in a little bit lower than expected, lower than the previous number, and there was an initial bullish reaction to that data. All right, so that wraps up the week, the economic data. Again, it's been a pretty big week with the FOMC earnings and economic data. All right, let's start with positional analysis now. This is, again, the ES futures, S&P 500 futures. And before I take a closer look at this chart, I want to take a look at a larger time frame. And I'm going to start with a 30-day, 1-hour chart for SPX. And on this chart, I'm showing a number of levels. Let me point them out. First of all, the dashed purple lines are showing the lower and upper weekly expected move. And note that SPX traded up almost to that level and now is trading lower, still above the upper daily expected move. So quite a range in the last couple days. Then the next levels are the lower and upper daily expected move, shown with the dashed blue lines. So SPX is still above that upper daily expected move, but now heading back towards that level. Then there are some Spotgamma levels on this chart. Let me point out the key daily levels. So first of all, the put wall has moved up to 4,500. So that put wall is Spotgamma's proprietary level. All these are Spotgamma proprietary levels. This is a strike with the largest net negative gamma. It can be expected to act as support. And that level has been moving around quite a bit this week. It has ranged from 4,000 to 4,300 to now 4,500. Again, that's the strike with the largest net negative gamma, can be expected to act as support. And the next level is the volatility trigger. The volatility trigger at 45.65, and that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And then on the other hand, above that level, market makers' position on the gamma curve is positive, like it is now. And market makers in a positive gamma environment have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. And that level did move up from yesterday. It has been moving up. Actually, the last couple of days moved up from 45.40 to 45.45 yesterday to 45.65 today. And then the last level of the key daily levels is the 4,600 level. That is the strike with the largest net positive gamma. That's the call wall. And that's also the absolute gamma strike, the strike with the largest absolute gamma. And that is expected to act as resistance, the call wall. And Spotgamma sees that as the upper end of the range. So that's the ceiling at 4,600 and the floor at 4,500. Put wall at 4,500, call wall at 4,600. All right, let's take a look at another SPX chart. This is a 1 day, 1 minute chart. Let me just zoom a little bit here. So SPX gapped up today above the volatility trigger at 45.65, tested that level, and then moved up above the upper daily expected move, still below the upper weekly expected move. That's shown with purple, and still trading above the upper daily expected move. All right, let's take a look at Bookmap now. So in Bookmap, I have the SPX levels shown in my cloud notes. I also have SPY levels. So for SPY, here's the 455 volatility trigger. And note that level did move lower from yesterday, slightly from 456 to 455. And then here's the SPX 45.65 volatility trigger. And note that level, as I pointed out on the SPX chart, did act as support. So those are the levels that are in play for today. Here's the SPY 456 level that did act as support. Right, so those are the main levels in play for today. The SPX and SPY levels. I'll talk about setups in a few minutes. and today was not an easy day to read for me anyway. All right, so that's the SPX. Let's take a look at Nasdaq now. Nasdaq has been very strong today. Magnificent Seven have been strong, driving Nasdaq higher. Pretty bullish order flow. You can see that large traders have been buying with iceberg orders. That's shown by the rising light blue line, as well as buy stop orders have helped to fuel the move higher. Let's look at the levels. I'm going to start with a QQQ chart, and I've zoomed out to show the move including yesterday. So this is the reversal right around 1 p.m. with the Bank of Japan yield curve control announcement that sent bond yields much higher and tech stocks and really stocks in the S&P 500 much lower. Let me point out some levels on this chart. So first of all, here's the put wall at 375. That level has not changed from yesterday. And then the call wall at 385. So let me zoom out just a little bit here. So this is, I'm going to look at the full session from yesterday. Oops. So looking at the full session yesterday, the Nasdaq reversed lower just below the QQQ call wall. And this is a setup that I pointed out. I posted in Discord yesterday as well as Twitter. I marked it up yesterday evening and posted this in Twitter and in Discord. This nice hero divergent setup yesterday, and then the second setup that I talked about yesterday, I didn't post this, was the reversal again at the Bank of Japan announcement. And the important thing to note here is the round trip from just right under the call wall, and note these levels did not change from yesterday, and down to just above the put wall, and now back up to reversing again just about at the high point from the from yesterday, and now moving lower. So round trip from the call wall to the put wall, back up to the call wall, and we'll see what happens next. There's one other level I want to point out. So again, here's the put wall 375 and the call wall at 385, and then the volatility trigger at 379. And note those levels did not shift from yesterday. For the S&P 500 and Nasdaq, I forgot to mention for the S&P 500, the absolute gamma strike for SPX and SPY did drop. So SPX, absolute gamma strike, I think I mistakenly said that was at 4,600 today. It's actually at 4,550. That dropped down. And then the absolute gamma strike for SPY also moved down from 455 yesterday to 450. So my mistake, again, the SPX absolute gamma strike moved down to 4550, and SPY gamma strike moved down to 450. And for the Nasdaq, the absolute gamma strike for QQQ also moved lower from 380 yesterday to 375 today. So the 375 level is the put wall and the absolute gamma strike for QQQ. All right, let's take a look at Bookmap. And here's this 15,900 level. That was the reversal level yesterday. And I believe that yesterday NQ actually touched that level before reversing lower. And again, I posted that in Discord. Reversed, touched the 15,900 level, reversed lower, and then there was also an entry point at QQQ 384. So that was yesterday. Nasdaq back up to those levels and now moving lower. So on Nasdaq here, I've got the NQ round numbers, big round numbers, the zeros and the 50s, as well as the QQQ numbers. All right, let's, and I've talked about shifts and levels, the levels that are in play for today. Let me look at questions. So Yoga Matt says, Hero Spy shows increased put flow all day. You'd think that would drive Spy down, and I think that's what we may be seeing now. We'll take a look at setups in a few minutes, and that market maker hedging flow has been consistently bearish. Traders taking negative delta positions the last time I looked all day in the S&P 500. So we'll take a look at setups in a few minutes. All right, so the last thing I want to take a look at before we get to the setups is the gamma notional, to see how market makers were positioned on the gamma curve. This is the number I'm going to look at here. This is market makers' position on the gamma curve at the beginning of the day for SPX, SPY, NDX, and QQQ. And note that the number is negative for SPX, SPY, and QQQ. And I really don't pay much attention to NDX. It doesn't really change that much, and it's not significant compared to the other numbers. So for Nasdaq, we just want to look at QQQ. All right, so these numbers for SPX and SPY both shifted lower. So gamma notional yesterday for SPX was positive 504, and it did shift lower to minus 16. So it's pretty neutral for SPX. And then for SPY, shifted more negative from minus 427 to minus 877. So as again, market makers' position on the gamma curve for SPY was negative. So as price decreases, market makers have to sell futures, and as price increases, they can buy back their short futures. So that can add to fuel to a move lower or higher. And then for QQQ, the number actually shifted slightly more positive or less negative from minus 462 today to minus 440. All right, so notable numbers here: neutral for SPX and negative gamma positions for SPY and QQQ. All right, let's take a look at setups. I'm going to start with the S&P 500. So this is what Yoga Matt was talking about, and I've got the entire hero signal the combined signal. I'll talk about that in just a minute, instead of just the SPY signal. So what this chart is showing is price, that's for SPX with the white line, and this is options trades and market maker hedging activity for a combined signal SPX, SPY, XSP, and ES futures, all under one combined signal. And our falling line shows traders are taking negative delta positions, and market makers eventually will have to sell futures to hedge their delta exposure. So this really took a while to play out. It really, I guess it really took almost 3 hours for that pressure to finally start to move the S&P 500 lower. And note this number, let's zoom in on this, is quite negative. This notional value, and just a moment ago it was about minus 5 billion. So that's quite negative. Let's see what traders are doing. So they're buying puts, as Yoga Mat indicated, and really not doing much with calls. This number slightly positive, 1.3 billion. So initially in the morning, traders were buying calls, but buying puts more aggressively. And then, just around noon or so, it looks like they took their foot off the gas with the calls. And they continued to buy puts, and price eventually rolled over. All right, let's go take a look at Bookmap. So now it looks like traders may be taking advantage of the drop to take positive delta positions. We'll zoom in on that just a little bit. You can see the rising hero line. But let's go take a look at really focus on the first part of the day, the first 3 hours. So we know that traders were taking negative delta positions, and price continued higher. We also know from this that larger traders were selling with iceberg orders. That's shown by the falling light blue line in the subchart. Also by these on-chart indicators here. As price continued to rise, larger traders selling into strength with iceberg orders, and eventually they get their way and price finally rolls over as cumulative volume delta flattens out, and then also this last move up really driven by buy stop orders, shown by these green dots, and the buy stop orders stop, they flatten out, and aggressive sellers start to come in, and you can see finally the pink volume dots, and price moves lower. So it took 3 hours for this to play out. Price eventually moved lower, but looking at this just from price action this morning, this was definitely bullish. Although it was difficult for me to go long, given the very negative hero flow that going against options traders and market makers is something that I just won't do. So there were better opportunities later. And again, if you were patient waiting for the short setup to play out, that would have worked. And I'm sorry, I don't know how to pronounce your name. Adarsh, hello. He asked, is this software free to use? No, I'm sorry. I'm using Bookmap and Spotgamma. And Bookmap is available by subscription. You also have to subscribe to data for Bookmap. So for Bookmap, you need to subscribe to the software and for data. I use DXFeed data for stocks and Rhythmic data for futures. And then Spotgamma is also available by subscription. As Floyd's Garage points out, TOS has a free limited version. I think there are, in that free version, there are 3 instruments available, ES Futures, SPY, and Apple. And then Spotgamma has a free 7-day trial. All right, so it looks like this 465 level acted as support again, just like it did right after the cash open. Options traders came in and started taking positive delta positions. All right, so we've talked about the hedging flow and the order flow. So during this move up again, options traders were taking negative delta positions and large traders were selling with iceberg orders, and that just made it really impossible for me to consider a long in the S&P 500 this morning. All right, let's take a look at Nasdaq. So Nasdaq is a little bit different story. So let's start with order flow. And order flow was more bullish. I really didn't get a clear read on Nasdaq until let's say around 10:45, 11 a.m. right here with this test of the QQQ 382 level. Notice how many times, first of all, it acted as resistance, and then it acted as support 4 times. And Nasdaq tried to get going higher on that third test, and you can see the shift in order flow from pink dots going down, and then aggressive buyers come in right around the 382 level. Then it comes back for a final test, and again aggressive buyers come in. We know that large traders were buying earlier with iceberg orders shown by that rising light blue line, and then as price starts to move higher, buy stop orders and aggressive buyers start to fuel the move higher. You can see the green dots and then also the buy stop orders shown by the rising yellow line in the subchart, as well as the bright green dots there, and then also the aggressive buyers taking price up pretty quickly from 382 to 384. So a little bit easier to read order flow for me this morning in Nasdaq. Let's go take a look at Hero and see what options traders were doing in Nasdaq. So this is a combined signal for NDX and QQQ. And our Darsh says heat map feature is also paid. Yes. So I believe Bookmap may have a free trial version. It does not. It maybe includes includes delayed data. If you're really interested, if you're a Thinkorswim customer, contact support, ask for the access to the free trial version. It's very limited, but it will give you. You can see the heat map again for the 3 signals that come with the free version: the Apple, SPY, and ES futures. And then I believe for Bookmap, the paid version is about $40 a month. It's a limited version, again, doesn't have all the features that I'm showing here in Bookmap Global Plus. All right, so there's another question. Sorry, I can't pronounce your name. Why is my stop subchart line a straight line in the earlier session? So I don't understand your question. What instrument are you talking about? All right, so let's take a look at Nasdaq. Again, this is a combined signal for NDX and QQQ. So remember I said from the, just looking at the Bookmap chart, I really didn't have any clarity until that final 2 tests of QQQ 382 at 10:45 and 11 a.m. And note, before that time, options traders were taking negative delta positions as price was moving higher, and then right around 10:30, they started taking positive delta positions, and then at just before 10:50, that was the final test of the 382. And watching order flow, it was pretty clear to see that shift from negative to positive, pink dots to green dots on that final test of 382, as options traders were taking positive delta positions. And Ardesh, you're welcome. Thank you for your kind words. And we'll go back to ES in just a minute. All right, so this was the read in Nasdaq, and again, I really did not have any clarity until around 10:45 to 11, watching options traders start to take positive delta positions and watching the order flow in Bookmap. All right, so those are the setups in the indices, S&P 500 and Nasdaq. Definitely, for me at least, took some patience today. All right, let's go back and take a look at Bookmap. Go to ES. All right, so it looks like, just like in the S&P 500, that SPX 4565 level has been a key level. Here in Nasdaq, the QQQ 382 level is key, acting as support again. And we'll go take a look at the live market in a few minutes to see what options traders are doing now. So we saw that in the S&P 500, they had shifted order flow just as price was testing the 4565 level. Well, let's go back to ES. So he does. Again, I'm sorry, I just can't pronounce your name. This is what the stops look like in my chart. Really kind of a gradual uptrend up until about 11 a.m. and then the stops really start to feel the move higher, especially starting around right here, fueling the move higher. You can see all the aggressive buyers, the green volume dots, large stop orders. So if yours looks any different, or, well, actually, let me just point out my settings here. This may be the difference. I guess I take these things for granted sometimes. My settings, the way I like to look at stops and icebergs, is in sum mode. So this is giving me a cumulative value for the entire day. There are a number of ways to look at this. Also, I have no vertical alignment. So these are my settings for the subchart, stops and icebergs. All right, so TV asks, could you point out iceberg buy and sell orders from today at key junctures? That is not necessarily how I look at it. There are other traders that present with Bookmap that do look at the events. I'm looking at the trend. I'm looking at a series of iceberg orders or a series of sell orders. Not necessarily at key junctures. Let's just take a look maybe at an example. So here you see the price reversal, again right around the 45.65 level. And note iceberg orders, the cumulative, they're still decreasing. So no significant iceberg buys there. And then typically stop orders will increase up to a certain point, and that could be a key juncture. So here's a stop run down to that level. And then as price gets going, aggressive buyers come in, then buy stop orders start to feel the move higher. So that's how I look at stops and iceberg orders. I'm looking at the cumulative flow in the subchart, again in sum mode, and then the events, or a series of events with the on-chart indicators. All right, let's take a look at some other setups. I want to go to Meta. Excuse me. Let's go to Meta. And first of all, let me take a look at one other thing in Thinkorswim here. This is the heat map for the S&P 500, and if there's any question about what's driving the market today, this makes it clear. The big cap tech stocks, Magnificent 7, definitely driving price action. Here's the Nasdaq 100, very strong today. Google, Meta, Amazon, Tesla, Amazon, Apple, Microsoft, Nvidia. Almost every stock in the Nasdaq 100 driving price higher today. All right, let's take a look at Meta. I'm going to go take a look at Hero first. Let's go to Meta. And remember, Meta reported earnings earlier this week, very bullish. Let's note a key level here. Here's the 320 call wall. And notice there was some consolidation around that level. That is the level that is expected to act as support, and will want a resistance and we'll talk about what happens when that when that doesn't happen. All right, so let's see what traders are doing. And they're buying calls. When traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And that is indicated by the rising orange line, the positive number here. They're also selling puts. The blue line that represents puts is positive, so they're selling puts. It's both positive delta. And they were buying calls maybe, I don't know, 5-10 minutes after the open, and they're aggressively buying calls. All right, let's take a look at a couple of other things actually. So first of all, note this hero signal here. Right here for Meta is very strong. This dot here is showing the current signal. And I'm sure it's difficult to see, but there's a slider range here. So the dot is near the upper end of the slider range, which is showing the comparing the strength of the hero signal to the last 30 days. So this is showing that the strength of the hero signal is almost at the upper end of the 30-day range. The colored portion of that is showing the last 5 days, and the hero signal for Meta today is above that 5-day range. So very strong hero signal for today. And then finally, let's take a look at one other thing. So I talked about the call wall breach at 320. Let's just go back and take a look at Bookmap for Meta. So here's the call wall at 320. Should act as resistance. It did for a little while. Price consolidated around that level. Initially moved lower, higher, lower again, and then accelerated higher. So let's go back to Spotgamma now. Take a look at some additional information. This is the history of the key daily levels for Meta for the last 10 days. So note that the key gamma strike did increase from 280 to 310. That's bullish. The call wall shifted higher from 280 to 320. That's bullish. The put wall also shifted higher. So bullish shifts higher in key daily levels there. Let's take a look at one other thing. So this is the put call impact chart. The orange bars are showing call gamma. The blue bars are showing put gamma. This orange line is below the blue line throughout the price range shown on this chart. This is showing that call gamma dominates. Here's the key gamma strike at 310, the call wall at 320. So when price moves above those levels, those calls, so traders are long calls, market makers are short calls, and as price moves up above those levels, those calls, especially the calls at 310 and 320, go further in the money, and market makers have to, their delta exposure will increase, and they'll have to continue to buy stock to hedge their delta exposure as traders continue to buy calls, and those calls at 310 to 320 especially go further in the money. So that's what happens, especially with a stock with a call wall breach. Those calls at the key levels there at 310 to 320 go in the money, further in the money, and traders have, market makers have to continue to buy stock to hedge their delta exposure. All right, so let's take a look, go back to Hero. So notice how price has leveled off as traders have taken their foot off the gas. So more specifically, the call buyers. So traders are buying calls, and they're also selling puts. All right, let's go take a look at Bookmap again. All right, so there's Meta, made it up past the 320 call wall, and then accelerated up to the 325 liquidity. Nice long setup as traders continue to buy calls, pullback entries. All right, so that was Meta. And let's take a look at Microsoft. Let's go take a look at Hero. See what options traders are doing in Microsoft. So they're buying calls and buying puts. Call buyers more aggressive, driving price higher. And again, note that as call buyers have taken their foot off the gas, price is now moving slightly lower. But this is showing in the morning that traders were aggressively buying calls. Let's go take a look at Bookmap. And a deeper pullback to VWAP here. Primary price target at 340. Let's go back and take a look at Hero. And note the very bullish order flow, all the green dots. Aggressive buyers all the way up, and a buy sweep shown by this small green dot. Buy sweep up to the 340 level. Let's go back and take a look at Hero. At 340 is the call wall. So that's the resistance level, and in the case of Microsoft, that level did act as resistance. All right, Serendipity says hello. The C levels and the lines, do you add that manually? Let me talk about that briefly. And I'm going to go to Tesla while I'm looking at that. All right, so let's go take a look at, go back to Bookmap. So Serendipity is asking about the C levels. Let's go to ES. So I have two different spreadsheets, one for futures, one for ES and NQ, and one for stocks. And I do most of my work in the one for futures. I don't change the stocks. I don't add it's just too much work to add all the Spotgamma levels for the different stocks that I trade. So I just have the round numbers. And so I only have the futures open. So let me point out, this is first of all Cloud Notes. I use an add-on called price lines, not price levels, price lines. This is an add-on that you have to purchase in the Bookmap marketplace. And I'm pointing to a file, CSV file, and then I have a server number, and then this Cloud Notes column points to that server number, 9001. And then let's take a look at it. So this is the spreadsheet, and you can put anything you want in here. So for ES, I have the big round numbers, the zeros and the 50s. That's shown here in red. Then I have SPY levels. That's shown right here. Actually down the these are the SPY levels. So I calculate the ES to SPY ratio. That changes a little bit every day. So I enter this manually, and then I enter the label manually. So I do that every day manually, but I'm not, this will draw the label and the lines automatically on my chart once I update the server and refresh the levels. So those are the SPY levels. And then these are the SPX levels. And then finally I have the lower and upper weekly expected move and daily move, and those are at ES levels. And right now there's a the last time I looked, about a 26-point difference between ES and SPX. So I'm just adding 26 to these numbers. All right, so serendipity, that's it. I guess it's semi-manual, semi-automatic. I'm just filling out a spreadsheet. So I get the information in the morning. This is part of my preparation. I update my spreadsheet, and then I update the chart to show these levels. All right, let's take a look at one other setup. All right, so for the lower and upper daily and weekly expected move, no, I'm not using Spotgamma info. I'm just getting that from an options chain. So the options chain in Thinkorswim just shows the expected move for every day that there's an expiration. All right, let's take a look at another setup. Here's Tesla. I posted this in Discord this morning. It really didn't. It looked like it was going to play out, but it really didn't. So what I was looking at is looking for a short setup. Right here, note the shift in order flow, all the aggressive sellers coming in. I was looking at a price target of 260, and let me show you what caught my attention. Let's go to Hero. I'm going to zoom in. And it's pretty unusual to see a divergence like this in for Tesla. So that's what caught my attention, is traders taking negative delta positions as price continues to increase, setting up a short. It was good for a couple of points, but that's about it. So it didn't play out exactly like I thought. The overall market was just too strong today. But anyway, short setup. I posted the Hero chart in Discord this morning. Again, good for a couple of points, and that's about it. So let's go back to Bookmap. And you can see the shift back in order flow. Aggressive buyers start to come in right around the 261 level. So aggressive sellers down to 261, couldn't make it to the liquidity at 260, and then price moves back up to the liquidity at 265. All right, so JJK asks, is it the same cloud note file from Spotgamma? You add the additional levels. No, it's not. So Spotgamma's notes, they're actually on the Amazon AWS server. So there's no way I could access that. So I used to have the Spotgamma levels and my own levels in two different columns, but it just didn't make sense to use up that extra space. I want to see all these levels in one column. So I'm looking at the SPY levels, which Spotgamma Cloud Notes, they don't have. Spotgamma Cloud Notes just has the SPX levels. So I don't have that on my chart anymore. I have my own Cloud Notes with the SPX levels, the SPY levels, and big round numbers, upper and lower daily expected move. But if you just are interested in the SPX levels, the Spotgamma Cloud Notes are perfectly adequate. Sometimes they don't have the exact ES to SPX difference or NQ to NDX difference. So I update that in the morning. They update that at the close of the prior day. All right, I've got a couple minutes left. Let's take a look at the broad market. Let's go back to Hero. So we noted as I was going over the S&P 500 a few minutes ago, the shift in hedging flow here right around 150. As options traders finally got on board here and joined the party and took advantage of the dip down to that SPX 45.65 level and started taking positive delta positions. And now it looks like they may be fading the move higher again. So far up until about 12:30, they really weren't getting paid for their negative delta positions. So really for the S&P 500, options traders really were not in sync with price until about 12:30. Right around here. We're finally, price gave in to the options traders in hedging flow and moved lower and then reversed higher right around 145, 150. So let's go back to Bookmap. And this shift in order flow is pretty clear to see. We talked about that before. Sell stops down to that level. Then aggressive buyers start to come in. And then finally, larger traders join the party with iceberg orders. Now price is back above the upper daily expected move and moving higher. Let's take a look at Nasdaq. And JJK asked for trading NQ, which hero do you use? I'm just about to look at that, but I look at the combined signal. All right, so Nasdaq made it back down. Wrong tool. Nasdaq made it back down to the 382 level. Then it acted as support multiple times, and now it's trading higher. Same shift in order flow. Sell stop orders and aggressive sellers, moving price lower. And then aggressive buyers start to come in just below the 382 level, moving price higher, back above the upper weekly expected move. Let's see what options traders were doing. All right, so JJK was asking about the hero signal for Nasdaq. So there are three signals you can use: QQQ, NDX, which has surprising notional value to me, but that indicates that I should be using the combined signal of QQQ and NDX. Let's zoom in a little bit so we can see that options traders came in around the same time as the S&P 500 started taking positive delta positions, and price moved higher as aggressive buyers came in at that QQQ 382 level. And let me just point out, I'm presenting on one screen, so I have to jump back and forth between Hero and Bookmap. When I'm actually trading, I have multiple screens, so I'm looking at, always have Bookmap up, always have Spotgamma up on the other screen, Hero typically, so I don't have to jump back and forth. I'm looking at both simultaneously, but you know, again, here for this presentation, I have to jump back and forth. All right, so it now looks like options traders may be starting to fade this move higher. A little bit of a divergence potentially. Let's go take a look at Bookmap. And my time is up. We'll call it a day after that. So here, back to the question about TV's question, point out iceberg buy and sell orders at key junctures. Again, I'm looking at a series, so I can see that larger traders are selling this move higher. So we know that larger traders are taking negative, options traders are taking negative delta positions, and larger traders have been selling with iceberg orders as price moved down, and they continue as price moves up. So not sure which way price will resolve here. We'll take a look at the S&P 500. Oops. All right, S&P 500 still looks bullish. Let's see what option traders are doing, and then then we'll call it a day. All right, so options traders have taken their foot off the gas as well for the S&P 500. All right, my time is up. I want to thank everyone for watching. Thank you for your questions and comments. I hope I've been able to answer your questions. If not, you can post your questions in the Options-Doug chat channel and Discord, and I'll try and answer them. So anyway, again, thank you. Thanks for watching. Thanks for your questions and comments. Have a great weekend, and I will see you on Monday. Bye.